Hi, good afternoon. My name is Joanne Dowdell, and I'm on the board of Green America. And it is a pleasure to be your moderator for today's webinar, Green Your Finances, where we'll take a closer look at socially and environmentally responsible investing and banking. A few housekeeping items. We will have a handful of questions for the audience to respond to, and we will take questions after each presenter has spoken. If you have a question, you'll simply click on the Questions tab in the upper right-hand side of your screen. Before we get into the nuts and bolts of today's program, here is your first question to kick things off. How many of you know what socially and environmentally responsible investing is? I know what it is, I have heard about it, and I'm not certain what it is, or I do not know what it is. Please give us your response. So this is very interesting. Almost 2/3 of the audience know what socially and environmentally responsible investing is. So for those of you who are not that familiar, socially and environmentally responsible investing and banking practices can also be known as sustainable investing, impacted investing, ESG investing, mission-related investing, and others. In essence, this type of investing involves considering the social and environmental impacts, financial performance, and oftentimes the corporate governance practices of companies you are considering investing in or doing business with. The concept of socially responsible investing has its roots in the 1960s, when investors used the power of the purse to exclude stocks and entire industries from investment portfolios, to take out industries like tobacco or alcoholic beverages, or to help protest and end the South African apartheid regime. The strategy is not just about screening out companies or industries from your portfolios. It can also include positive screening, seeking companies in specific industries, and those with particular corporate governance, environmental, and social profile. We all know how important it is to exercise our right to vote. As a shareholder, you also have the ability to cast your vote when the annual proxy statements are released. You can vote for the board of directors, auditors, executive compensation, and shareholder proposals. Shareholder proposals are often asking companies to provide greater detail on specific practices, measuring and reporting on certain social, environmental, or governance risks. Then there is the ability to engage with companies with the goal to change their thinking, behavior, and policy in certain areas. Many organizations like Green America and shareholders like the big pension funds and other institutional investors engage companies through developing and supporting public awareness and public action campaigns. Today, according to the Forum for Sustainable and Responsible Investment, almost $9 trillion was invested in the end of 2015, according to socially and environmentally responsible strategies. The big question that is often raised is, do you need to sacrifice performance when using a social or environmentally sustainable investment strategy? The simple answer, no. There is a growing repository of evidence, studies published for decades, that shows SRI investments have performed as well as or better than conventional investments. Now let's take a deeper dive. Your first presenter is Deborah Munson Hudson with Self-Help in North Carolina. Deborah will discuss the benefits and importance of community banking and why you should consider it in your money management strategy. Before I turn it over to Deborah, I have another question for our audience. Where do you currently bank? All of my money is in one or more large national banks. Some of my money is in a local bank or credit union. Some or all of my money is in a community development financial institution fund or credit. Please use the poll tab. Thank you. Okay, 50% of responses, all of my money is in one or more large national banks. 25%, some or all of my money, and 25%, some of my money is in a local bank or credit union. So with that, I will turn it over to Deborah Momsen-Hudson. Deborah?
Thank you, Joanne. As Joanne mentioned, I'm Deborah Momsen-Hudson from Self-Help Credit Union, and we are a national community development credit union. And Joanne talked some about what socially responsible investing is, and investing in community development credit unions and banks is just one of the aspects of socially responsible investing. Folks usually talk about 4 aspects of SRI. Positively investing in socially responsible companies, so rewarding companies for their socially responsible activity. Negative screening, so taking companies out of your investments because of their negative activity, like tobacco or firearms or military spending, for example. Shareholder activism, as Joanne talked about, and then community investing. And there's many aspects of community investing. There are things like doing international or domestic microfinancing, but what we're going to talk about today is specifically investing in community development banks and credit unions domestically in the United States. As part of everyone's financial strategy, hopefully you have a checking account, savings accounts, and hopefully everyone should have or is trying to have 3 to 6 months of savings for emergency living, to cover emergency living expenses in an emergency. A community development bank or credit union is the perfect place to put those funds for a savings account, a checking account, or your emergency fund. And versus a traditional bank. And there's a couple reasons. Typically, they earn the same return you would get at a traditional bank. They are federally insured, just like a traditional bank. They're either insured, if it's a bank, community development bank, it's insured by the FDIC. And if it's a community development credit union, it's insured by what's called the National Credit Union Administration, or NCUA, which is the credit union equivalent to the FDIC. And then the main reason is really because community development banks and credit unions are doing their work to support low and moderate income families and communities. So all the money that you have on deposit or in your savings account or checking account at a community development bank or credit union is going to make a difference in low income neighborhoods and communities and families. So for example, they go to help families buy homes, build businesses, start childcare centers, help for charter school loans, for loans for real estate development, affordable consumer financial products, immigrant lending, etc. So it's a great way to use your money in a way that's consistent with your values. And I think it's the simplest way, actually. The really allows you to have the impact of a double bottom line with your cash. The one example of a borrower that was helped actually by Self-Help Credit Union, where I work, Community Development Credit Union where I work, is a family named Ellis and Venus David. They received a predatory mortgage loan actually in 2006, and the loan had a balloon payment on the mortgage that they were not able to afford. They struggled to make payments. They wanted to stay in their home. Eventually they lost their car in the process because they weren't able to make both their car and their mortgage payment. In the end, their home went to foreclosure. After several years, they came to Self-Help, and they had poor credit score because of their foreclosure and because of their financial difficulties. And Self-Help was able to work with them to repair their credit and to get them ready for home ownership. So Self-Help worked with them, and they were eventually able to get a loan that they could afford. Now, the Davids are very proud homeowners. They're very excited to be in a home and to be homeowners again because of the work that Self-Help Credit Union did with them. And Mr. David says that it makes him feel self-worth that he has his own place again. So if you're interested in a way to make a difference with your cash in a way that's consistent with your values, investing your savings, checking, emergency fund in a community development bank or credit union is a great way to do that. It's federally insured, the same or similar return, and you make a difference, and it's easy to bank electronically with community development banks and credit unions. Thank you.
Great. If anyone has questions, simply click on the question tab and type in your question, and we'll take a few questions for her. And this will be on the topic of community banking.
I have one question. I think a lot of people get a little bit nervous about, not nervous, but feel that a community bank or credit union is somebody who is like a member-only type of bank. How does that work? Are credit unions and community banks more open now to accepting outside members, or is it still something where you have to be a part of a membership?
That's a great question. So community development banks don't have any membership restrictions. Community development credit unions do have a membership bond. Each credit union is different. They're sometimes geographic bond, or a bond of an employment situation, or a bond by being affiliated by a membership of another nonprofit organization. That's actually Self-Help Credit Union's bond. You become a member of our affiliated nonprofit, and then you're a member of Self-Help Credit Union. But typically, there are not barriers to being members of community development credit unions.
We have one more question. What about investment brokerage accounts?
That's going to be answered in Danielle's section, I think.
Any other questions?
Or let me just say one thing about that. That is something you should talk to your financial broker about. But yes, you can do investment brokerage accounts in a socially responsible way. Let me just answer quickly.
Sorry, one more question. Are credit unions for profit?
That's a great question. Credit unions are nonprofit, and any profits are plowed back into the credit union or distributed to members.
Perfect. Okay. Your next presenter is Danielle Burns with First Affirmative Financial Network based in Colorado. She will help you navigate identifying and working with a financial advisor, which is an important piece of the investment process puzzle. So you'll be able to make better informed decisions. But first, let's ask the next question of the audience. What is the single biggest reason you may not have a financial advisor? I don't know where to begin or how to find an advisor. I don't think I can afford an advisor. I have an advisor, but he or she does not encourage using sustainable or socially responsible investment strategies. We'll give the audience a few minutes to answer the question. And don't forget, just click on the poll tab in the upper right-hand side. Okay, 40% don't know where to begin or how to find an advisor. 40% don't think they can afford an advisor. And 20% have an advisor, but he or she does not encourage using a sustainable or socially responsible investment strategy. Thank you very much for your answers. And now I'm going to turn this section of the program over to Danielle, who'll tell you a little bit more about identifying and working with a financial advisor. Danielle?
Thank you so much, Joanne, and good afternoon, Green American members. I'm really excited to be here with you all this afternoon. This is a really exciting time in the financial services world. Women, we are on the cusp to receive the greatest wealth transfer in history. Millennials are really disrupting the status quo of what financial advisors, financial services in that space looks like. And organizations such as Green America are really changing the way that investors have a voice in the economic and social landscapes of today. As Joanne mentioned, my name is Danielle Burns. I'm with First Affirmative Financial Network, and I am a current board member for Green America. And so today I'm going to share with you just a few key highlights on what is a financial advisor, who needs one, what is the difference between an advisor who focuses on the traditional side versus one who specializes in providing sustainable, responsible impact investing solutions, and finally, where you can find an advisor. So first, let's discuss what is a financial advisor. By definition, a financial advisor is a person who provides financial advice and or guidance to customers for compensation. Financial advisors or advisors can provide many different types of services, such as investment management. That goes to that investment brokerage piece a little bit that Deborah was referring to. They help with income tax preparation, estate planning. The investment advisor, financial advisor, they must also carry a Series 65 license to conduct business with the public. And there are also another wide variety of licenses that an advisor can obtain for different segments of the financial services space. So what does that really mean? A financial advisor is a person who can really help you to navigate extremely complex tax issues, investment choices, and one that I've found to be of particular support that they offer is the emotional decisions that affect our financial well-being. If someone passes away or you have family dynamics being brought into the conversation, they can really help just focus on the financial decisions which are necessary at that time. Furthermore, they really help folks to feel more secure in retirement. They can help you to increase your wealth, and they help you feel more confident about your financial status. So who needs a financial advisor? In short answer, everyone. And based on the poll that we just did, research shows that many people think they have to have a lot of money, and that was the number. 40% of you felt that you can't necessarily afford a financial advisor. And honestly, while it's true that all advisors are not created equally in terms of how they charge clients for their services, there are many advisors who work with clients for little or no minimum. So what that means is if you have $100 a month that you can afford to invest, you can find an advisor to help you. Perhaps the advisor works with clients on an hourly consultant rate, or they're taking clients pro bono or something. But really, no matter the structure, everyone needs an advisor to help them plan for retirement, take a dream vacation, build their forever home, anticipate or plan for unexpected emergencies, and really leaving a legacy for their children's children. So now let's talk about what is the difference between a traditional financial advisor and one that focuses on providing SRI, Sustainable Responsible Impact Investment Solutions. Traditional and SRI advisors, they have both studied for and taken some industry licenses like the Series 65 that I mentioned, and they both follow state and federal regulatory rules as indicated by the states in which they do business. Advisors who focus on providing SRI, however, they're generally more focused on actively seeking ways to invest their client assets into portfolios that reflects the client's values. SRI advisors are dedicated to bridging the gap between what the client is passionate about as well as their investment strategy. So they're helping the client to make money and make a difference. They help clients invest in companies that contribute to a clean, healthy environment, treat people fairly, produce safe and useful products, and really support the efforts to produce a more peaceful, promote a more peaceful world. Lastly, I would be, remiss if Joanne had spoke about this in, her opening remarks if I didn't mention how SRI advisors really help clients with shareholder advocacy. So for some, this is the most important thing that the financial advisor can help them with. Advocacy has always been important, and it's becoming more and more important with the current political climate that we're in. And advocacy really helps investors like yourself have a voice and a seat at the table. Advocacy is a complex topic a little bit, and understanding what companies are doing and really getting under the covers to understand what's going on is key. And this can really help investors to contribute and take action from an advocacy perspective. So where can you find an SRI advisor? With the growing demand of investors seeking to align their investments with their social values, more and more advisors are getting into the space. And this is great. This really, we want to get as many people into this conversation and focus on this as possible. I hope 20 years from now it's a non-starter. Everyone is doing it, so it's not an issue. And so, out the gate, start with where you bank. Start with if you have an advisor currently, you can chat with them and say, this is something that I'm interested in. Do you know about it? Can we help explore the options together? As a starting point. Additionally, the firm that I work for, First Affirmative, we have been providing SRI options for almost 30 years. It's our core and only business. We have advisors, a nation network of advisors committed to helping as well. And additionally, Green America's National Green Pages is an excellent place to start as well. They have a complete listing of advisors who specialize in SRI. So thank you very much for your time, and however I can be of assistance, I'd be delighted to do so. Thank you so much. Joanne?
Thank you, Danielle. And if you have any questions for Jane, feel free to click on the question pad and open it up for some questions. I'm going to kick the question off. Danielle, I have one for you.
Sure.
You mentioned if you have an advisor and he or she is not inclined to encourage this type of strategy, is it appropriate for you as the client to, maybe insist or come with some ideas of your own about the types of companies or industries you would like to invest in, and maybe those that you would like to avoid, to give them more specific direction as opposed to the advisor sort of guiding you in that way, but you coming with your own set of goals and objectives. Is that appropriate?
I would say yes. I feel like at the end of the day, the investors should be in charge and in control of their investments. If they have some ideas and suggestions, I mean, we don't know what we don't know. And so if we're a partnership between the client and the advisor, if together we can, figure it out, navigate it, understand where the resources are, I don't see any harm in that. So going to your advisor and saying, hey, I've been doing some research, I found these resources, here's some things that I'm interested in, can you take a look at it, let me know what you think, and start to just at least have that initial conversation and dialogue, I think is absolutely appropriate.
How can you tell if a financial advisor has fiduciary standards? And maybe explain what that is.
Yeah, great question. So depending upon where the advisor works, whether they are an independent advisor, which means they are not necessarily governed, they don't work at a large box firm such as a Merrill Lynch or UBS or something like that, their fiduciary responsibility might be a little bit different than an advisor who works at a CDFI or traditional bank. So, it depends on where the advisor is working and what their compliance oversight is. And so each advisor that you work with, you would need to chat with them about what their regulatory environment is and simply ask them, where they fall in that place.
And I have one more question. It seems like there are a lot of options of SRI within traditional advisors now. Are those good options if you've been with a financial advisor for 30 plus years and you start to just use the options within those frames? Is that a good way to go? Or?
Yeah, so it's a great question. And the short answer is if you go to, a big box chain type of bank, they may have access to some of your more standard, familiar SRI type of investment firms. But you may not be able to tap into some of the resources such as the advocacy piece that I mentioned that is very important. And not to say that you want to just terminate that relationship that you've had, but I would certainly encourage them to, dig a little bit deeper and find out if there are additional resources that they can get their company to support or new products that they can have access to. But you just want to make sure that you feel you're getting the best services to meet your investment objectives and your social values as well.
Perfect. Well, thank you so much, Danielle. Now that you all have a better sense of what sustainable and environmentally responsible investing is, you have gotten a broad overview of the benefits and attributes of community banking and community investment. Let's also take a look at the type of resources that are available to you. And you can put that together with where to find and how to work with a financial advisor. Before we hear from Fran Teplitz with Green America here in Washington, D.C., I have another question for our audience. Responsible finance is so important. Where would you go to get started? I would ask a bank teller. I would do an internet search. I would ask a family member or friend. And remember, click on the polls tab to enter your response. Wow, this is really interesting. 2/3 would do an internet search, and 1/3 would ask a family member or friend. And with that, I'm going to turn it over to Fran Teplitz with Green America to give you an overview of some of the resources you can use when considering your portfolio and investment options.
Great.
Fran?
Thank you so much, Joanne. It's wonderful to be here in person with you. Really appreciate it. And it's really wonderful to connect once again with our Green America members via webinar. Really appreciate it. Again, I'm Fran Teplitz, and I serve as Green America's Executive Co-Director focused on business and investing. And it's so important that we're carving out this time early in the new year to focus on investing in banking that supports both people and the planet. As you know, as Green America members, our mission is to harness economic power. It's the strength of consumers, investors, businesses, all pushing together in the same direction to create the kind of communities and world in which we want to live in. We can vote almost every day with our dollars. So regardless of what's happening on Capitol Hill, in the White House, wherever it may be, we have a vote that we can make in terms of how we deploy our assets. And a lot of times I think people forget about that. We don't think about the power of the purse that you talked about at the very beginning. But these are decisions that we make on a regular basis that really impact, in a very serious way, social justice and environmental sustainability. So when we think of our funds just sitting somewhere, they're sitting in a checking account or a savings account or a mutual fund, we know they're not just sitting there doing nothing. That money is being recycled in communities and in various projects. So our assets could be recycled to support the fossil fuel industry and infrastructure, or alternatively, depending on the investment or banking decision that we made, like Deborah highlighted, our assets could be supporting affordable housing or small business. Our assets of whatever size can be invested in companies with really strong policies on diversity and inclusion, or in companies that are laggards on a host of issues, environmentally and socially. So with 2018 just getting underway, it's a great time to review your financial goals. And so this year, what we're hoping is that when you review your financial goals, it's not just your monetary goals, but that you're making a goal to use socially and environmentally responsible banking services and products. So that would be the New Year's resolution for this year. So building on what we've just heard from Deborah and Danielle, I'm going to focus on how to get started using a variety of Green America resources. Please note that at the conclusion of the webinar, we'll be sending you some links that you can use, so don't worry about having to scribble down very quickly right now a number of long URLs. We'll make sure that you get all that information afterwards. So I'm going to highlight 6 steps here to jumpstart everybody's engagement, right? So the first step is a very easy one. If you're a person who uses a credit card, you really need that tool, and you're someone who can pay off your balance in full every month, because we want to be responsible credit card users, then we recommend that you use a credit card that is run through a community development bank or community development bank or credit union, or at least a local bank. And we have one here. There's a Green America credit card, for example. This is the one that I use that is run through local banks. So we can bypass the large conventional mega banks that have been responsible for so many of the predatory lending practices that we're all familiar with. And that way, with every swipe of your card, you're supporting community banking in one of the best ways. On our website, we have some FAQs and a list of various sample credit cards for you to explore. So this one with Green America also serves to help fund Green America's green economy programs, but there are other cards as well that you may wish to consider. So step number 1, pretty easy, switch your credit card. Take charge of your card, as we like to say. The second one gets to Deborah's original point about basic banking services. Your checking account, your savings account, certificates of deposit. We have a searchable database. It's in beta form right now, but it features community development banks and credit unions, as well as banks that are part of something called the Global Alliance for Banking on Values. And this is a consortium of banks that are really dedicated to green practices throughout their operations. So you can search for a bank or credit union that is in your geographic area, or if you're comfortable with online banking, you can look a little broader and be sure to investigate the sophistication of the online banking platform if you choose to use one of those. We also have a list of reminders. So as you switch accounts, again, it's not rocket science, but it's really helpful to have a list of friendly reminders. For example, you may have automatic payments, automatic withdrawals. When you're switching accounts, you don't want to forget about those. And so we have handy tips. For example, you'll want to keep your old account and your new account both open simultaneously for a certain period of time to make sure that there's no slippage in your financial transactions while you're moving over to your community development bank or credit union. So we have a list of little pointers like that so that you have a smooth experience. The other thing we provide related to switching banks is that you're sending a message when you move your assets out of one institution and into another institution, but the bank isn't always aware of your motivation. I mean, maybe you moved, or right? I mean, they don't know why you may have pulled out all of your funds. And in this case, it's really important to let them know why. And so we've drafted a sample, we call it the Dear John letter, why you must break up and why you must get out of this banking relationship, why this banking relationship is not working for you. And so we have a sample that you can draw from that might remind you perhaps of some of the negative banking experiences that you've encountered, or you've just been reading the headline news and you no longer want to be associated with the types of large conventional banks that have caused so much financial crisis for so many people in our country. So step number 1, your credit card. Step number 2, your banks. Step number 3 goes back to Danielle's point, finding a socially and environmentally responsible financial advisor to work with you. Someone had raised the question, well, how about someone who seems to deal with SRI or corporate social responsibility, but they're part of a conventional investment house? So we see this increasingly, which on the one hand is a good sign that there's a growing number of clients who are asking for this. But I must say, in my personal experience, you will do much better if you work with an SRI dedicated financial planner or advisor who really understands the breadth of products and services, and perhaps even more importantly, understands and supports your decision to align your portfolio with your principles. I mean, that's the key point. You can walk into many investment firms and they'll listen to you for a little bit and then they'll start trying to talk you out of doing SRI. And much of that comes from a lack of familiarity with the studies and with the products that are currently available. And so if you really want the full breadth of SRI power across all asset classes, then your best bet is to go with a financial planner who is deeply schooled in impact investing and can support you the most. Step number 4, then, we also talked about, there may be a period of time where you own direct company stock. You may not be pleased with all of these companies, right? Maybe you inherited these stocks and you're trying to figure out what to do with them. But in the meantime, you can certainly be voting your shareholder proxies. We have information. What is a proxy anyway, right? You look at this ballot, maybe I'm not quite sure what to do with it. We have a graphic that details, line by line, what to do with your proxy, how to fill it out. And it's really important to take a look at that proxy ballot and the materials that come with it. We hear time and again from people who are surprised, who said, oh, I didn't realize that I could have voted on this issue regarding transparency concerning human rights or toxic chemicals or climate change goals being put forward at this company. There's a host of issues that I'm sure many green Americans care deeply about. these issues are being brought before corporate management. And if you own direct company stock, you can vote on those proposals. You can vote in favor of them. And this is another reason why also to go with an SRI, dedicated financial advisor, because the automatic reflex oftentimes on the conventional side is to simply vote with management. And time and again, repeatedly, overwhelmingly, 99% of the time, management is urging investors to vote against social and environmental resolutions. So you want to make sure if you're working with an advisor that that advisor understands where you're coming from and that you want to support those types of resolutions. Step number 5. We've been receiving a lot of questions in recent years about fossil fuel company divestment. And of course, this is a really important way to address the climate crisis. And we've highlighted on our website a number of the products and the service providers who can work with you. So over a certain period of years, you can responsibly divest your portfolio of fossil fuel holdings, whether it's coal, oil, natural gas, utilities. You can understand what your exposure is, your risk, and what the options are out there in terms of other holdings that would meet your financial needs. And again, another reason why an SRI dedicated financial advisor can make a big difference in this area. And the last step I want to highlight before we open it up to questions is to certainly make a point to talk with your employer if your employer offers some type of retirement benefit. Chances are it may not be in the area of impact investing. Perhaps there's not even one fund option. This is very common. But you could certainly begin by going to your HR or benefits manager, perhaps a small group of staff together. You can learn more about socially responsible investing, set up a meeting, and talk about the types of offerings that you would like to see offered to the employees. This is often a longer-term educational process, but well worth it because it is within your power to change what's offered on those retirement plans. There's flexibility. There may be more flexibility than people realize, and to begin that conversation within your workplace so that more people can take advantage of these investment opportunities. So we have a pamphlet that's geared for both employees and employers to jumpstart that conversation in the workplace. Great. So again, our homepage is simply greenamerica.org. We'll be sending you various links to access our resources. We also have this print guide, which is also available digitally. This is our guide to social investing and better banking. We also have our national green pages, which is a larger compendium of products and services, products that you can buy for your home and personal use, as well as financial products. So we have all of this available to our members and look forward to sharing this content with you.
Thank you so much, Fran. And now we have an opportunity to ask one last question before I let you all go. You've learned a little bit more about the great way to achieve positive investment results while investing with your values. Are you more or less inclined to begin or to continue your socially and environmentally responsible investment strategy? More inclined to begin, less inclined to begin, more inclined to continue, or less inclined to continue? And again, click on the poll tab to answer the question.
Personally, I'm even more inclined.
Wow, wonderful. Well, 1/3 is more inclined to begin, and 2/3 are more inclined to continue. And I was remiss. I did not offer an opportunity for you to ask Fran any questions, and I apologize for that. If anyone has any questions for Fran, please click on the question tab and ask your question. And this will be about resources, how to find information, and maybe you would even like to know a little bit more about the programs and offerings of Green America.
I have a question.
Please.
How does Green America vet its financial advisors through on the green pages?
Great. So people may know we have a national network. We call it our Green Business Network. We have our own in-house certification for the companies in the Green Business Network. It's optional whether or not businesses choose to become certified, but the only ones that we make public facing are the ones that have gone through our certification. So if it's a product that you purchase, maybe, we checked for, whether it's organic, whether it's for fair trade. There's not a single definition, as you may have picked up, on socially responsible investing, as you may have gleaned, because it has a lot of different names: impact investing, sustainable investing. But there is a philosophy and a practice behind it. And so we ask financial planners and advisors about their continuing education. We ask them if they are a member, for example, of the National Association of Practitioners that's dedicated to social investing. It's called USSIF. We ask them a number of questions, and we want to see, we study their websites, we talk to them about their client base, their knowledge of shareholder advocacy, all of these points to make sure that they can deliver in an SRI manner. It's also important to note that there is indeed a spectrum of what we have sometimes called SRI intensity. So there are some mutual fund companies and other product providers where it's a combination of SRI and conventional. So we make that public facing, but we're clear, that you have to look at the mix of these holdings. So you can look at the resources that we put forward and see, oh, this is a mix of SRI and non-SRI. Maybe this is where I'm at right now. This will work for me. Or I've moved beyond that. I'm looking something that's 100% full tilt, SRI dedicated, on every level. And then that becomes apparent also through the company descriptions.
Okay, and with that, thank you all so much for taking time out of your busy schedules to participate on today's Green America webinar. We look forward to getting your feedback and hope you got some really good takeaways that you can put to good use. Lastly, please check your inbox for the upcoming webinars in Green America's February series of programs. Our next one, How You Can Change the Fashion Industry, is being held February 8th at 3 o'clock. Thanks again, and we look forward to your participation in our program.
Thank you.
Thank you.